Hi, my name is Hitesh, and good afternoon to each and everyone. I will be taking a very good topic, which is gaps. In today's world, it is the most common feature which is available in our markets. Gaps, to understand gaps, what are the gaps? The gaps can offer evidence that something important has happened to the fundamentals or the psychology of the crowd, which influences the market movement. So basically, gaps are having we are having a four types of gaps. Today I will be covering total four types of gaps. One is common gaps. As the name suggests, common means it does not have much relevance. Sometimes it is referred to as a trading gap. The common gap is usually uneventful. In fact, they can be caused by a stock going ex dividend when the trading volume is low. You can have gaps on, let's say, Friday closing to Monday opening. You can have a normal gap, 5 rupees up, 5 rupees down, without any relevance, and it tends to close the gap immediately. So these are the gaps which will not focus more, because as I suggest, okay, these are the common gaps, and we don't have any relevance as such. So there is not much any interpretation or any money to be made from this uh, common gaps. These gaps are common and usually get filled fairly quickly. Now, basically, I'm interested in sharing the other three gaps, which are more dynamic and useful to us. One is the first is the breakaway gap. These breakaway gaps are there are two types of breakaway gaps. One is a reversal gap, so it reverses the trend, and second is a breakaway gap is it comes in the continuation form. That is, if the prior move is up move and after a consolidation, if it opens with a gap up, it will go in the journey of the prior up move. So there are two interpretations in breakaway gaps. First, a little theory part, and I will immediately come back to the charts and graph with examples. Breakaway gaps occur when the price action is breaking out of the trading range or a congestion area. So these type of gaps, which I have just mentioned, are called a continuation pattern gaps. To break out of these areas requires market enthusiasm and volume should pick up significantly as many are holding positions on the wrong side of the breakout and need to cover or sell them. It is better if the volume does not happen until the gap occurs. So prior to gap, if there is a moderate volume, and post gap, if there is a high volume, then that gap is having a big significance. The point of breakout now becomes the new support. That is very important. So first I will come with the breakout chart, breakaway chart. Today Reliance Industry opened with a gap up. I will show you. So if you can see the horizontal, this vertical line, yesterday's closing was 1458 and market opened up around 1467 today for Reliance Industry. It is marked by this vertical line. It opened with a gap up. This gap up is a breakout gap. Now today, once you know it is having a breakout gap, today the Reliance Industry has moved straight towards 1511 high. So post gap, the low was 1465 and it went up strong. The prior trend was down. In this case, this prior trend was down. Once Reliance opened with a gap up, it went up significantly up. Now I will show you a few other examples of breakout gap. Say for example, now I will give you one more example of breakaway gap today in Bandhan Bank. If you see, Bandhan Bank has opened gap down. It has reversed the prior trend. Once it has reversed the prior trend and it opens with a gap down, post gap, if the high of 577 is not breached, you can always have a view of down short going short with a stop loss of 577. See, this is a chart of Adani Power. I think this is a daily chart. On 17 May 2019, the previous was a fall. It consolidated, and from a 4125 high, the next day it opened with a gap up around 4470, registered a low of 4265. So here there is a gap and there is a reversal. So whenever the prior trend is reversed with a gap up, it is a reversal pattern. So I discussed there are two types of gap. One is a reversal pattern and one is a continuation. So this is an example of a reversal pattern where Adani Power has made a gap up and it has reversed the prior down move. So the breakouts are very important. Now, if you see this breakout, if compared to last 10 days, on this day, the volume was very big compared to the last 10-day average. So it confirms that breakout gap is a valid gap which is showing a reversal. And from here, 41 rupees, it has made a new high approximately towards 68 rupees. And still, it is going horizontal, and the view of this Adani Power is not yet changed. And look at Amara Raja battery. On this day, 8 November, it was down. The following day, it opened with a gap up. The prior trend was down. It opened with a gap up. It reversed the trend. You see the volume. It is having a biggest volume. So when it opened around 678, registered a low of 670. But when it again went up above 678, that is the time that the buy was established. The second signal it established above this level 695. So these are the breakaway gaps. Breakaway gaps, I'm giving you an example of a reversal. The prior trend was down, it opened with a gap up, it has reversed the trend. So breakout gaps are really important to identify. If you see BEL, Bharat Electronics, on the daily chart, the prior trend was down. It started giving a marginal reversal. At the moment it opened with a gap, it reversed the down move and it has moved up. So unfilled gaps are very positive, and this is an example of the breakaway gap. Same year, on 4th of November, the prior trend was up. It reversed with a gap down. So once this gap is remaining unfilled, you have a trend which is reverse of the prior trend. In this case, it has reversed from the up move to a down move. So gaps are important technical setups where it shows if it is a reversal pattern. So you can encash because you can interpret this way. Okay, in this up move, let's take this Bharat Electric. The up move was from 103 to 122. So all the buyers who who might not have booked profit are under a trap once this gap down happens. Now this is a chart of Cipla. This is a 1 hour chart of Cipla. On 7th October, it made a gap up, and thereafter it has remained above the gap area and moved up. So again, I'm giving you this example of a reversal pattern. See, again, I'm giving an example of this DLF. DLF, DLF prior trend was down. It reversed the trend with a gap. So these are the breakout gaps. Breakout gap, if remains unfilled, gives you a big positional view. At 150, DLF had a buy signal. Condition was that the gap remains unfilled. Once it remains unfilled, and you must have observed the trend is up. You can add your few strategies. For example, you can take a simple moving average as your stop loss. Once you identify, so this is a 10-day simple moving average. Now once you have identified that the script has opened gap up and the prior trend was down and it has reversed the trend, one can enter the script, let's say in this example around 157 or 155, and should have remained invested till now because it is trading above the simple 10-day moving average. Now the, at 155 your entry point was at 155. Now your stop loss would be 203 as the moving average is at this point. And one can always take examples of the support of RSI if there is a divergence, overbought positions, or many oscillators to confirm that the change of trend might take place. Now, few examples I gave you was a breakaway gap, which was a reversal pattern. Now I am giving you an example of a breakout gap, which is a continuation pattern. Let's take example of Equitas. Equitas had a down move. It consolidated. And here, if you can witness here, on from 13th September 2019 till 16th September, it opened down with a gap. So this gap down was a reversal pattern. The prior trend was down. It came out of the consolidation and again came down. So it's a continuation pattern. Again, post gap down, if the gap area is not filled, then it will remain down in this case. And till now it is down. Now, friends, I will come to second gap, which is called a measured gap. According to me, this measured gaps is very important because it gives you a targets basically. Now, first, let me tell you something about the measured gap. They are also called, these runaway gaps are also called as the measuring gaps and are best described as gaps that are caused by increased interest in the stock. It is usually represents traders who did not get in during the initial move of the trend and while waiting for a retracement in price. This type of runaway gap represents an utmost panic state in traders. Measuring gap will occur in the middle or halfway through the move. So what do we mean by this runaway gap definitions? I will give you examples. I will give you a recent example of Siemens. Friends, can you see this gap here? So for a runaway gap, the prior move is up move. You can see this big green candle with a strong volume. If you can see this candle, we had a down volumes here. The volume breakout took place. The prior end is up, So if the prior trend is up and it opens up in the same direction, then this is called as a runaway gap. This runaway gap is called a measured gap also, because here on this day after the breakout condition, if it does not fill the gap, you can estimate the upside target. I will show you how to calculate this. I have connected this bottom and I have connected this high, which is a pre-gap area. After this pre-gap area, I am marking the low of the post-gap area and taking a retracement of 100% to arrive at the target. So if you observe here on this runaway gap, the condition was the prior trend is up and the post gap it runs in the same direction which is up, then you can measure it. So in this 5th August low of 1086 and the high of 1335 attained in high of 20th September, you calculate the difference which is moved up and add it to the bottom, that is 1350, you arrive at a target of 1661, and you see the chart, the Siemens had adhered to the target precisely. I will show you the today's query in Iris, which were the items which showed a gap up. Now let's take example of idea. From the bottom, it made a gap up. So this was a breakaway gap here. Today we had a second gap up. So this qualifies for a runaway gap because the prior was up move and it opened gap up today. So condition, if this gap is unfilled, then based on this runaway gap, you can predict the targets of this pattern. So if you measure this low and high of pre-gap area and measure it from the low of post-gap area, one second friends. So you can have a assumption that if the gap remains unfilled, this idea cellular which is quoting around 525 can zoom to 7 rupees based on this study. So the idea is that this runaway gap, you can forecast the target. That is the beauty. I will show you other gaps. This is Corporation Bank. Today it is opened with a gap up. So prior move was up move. It is opened with a gap up. This qualifies for a runaway gap. So what would be the target? Same, 100% from the prior move. Yeah. This Corporation Bank, if you calculate from this bottom, that is 14 bottom of 1552 and measure the high, that is 22 rupees. Take out the difference, add it to the bottom of today, you arrive at a target of 29 rupees 65 paisa. So this is a runaway gap, which is also called as a measured gap, and you can forecast the target. Second
Second
thing,
thing,
okay, so first we found the target. Now, if you can see the graph of Corporation Bank, the bottom was 1555. It went up towards 22 rupees and it opened with a gap. If the gap remains unfilled, so from the bottom of 23 rupees 11 paisa, today's low, we arrive at a target of 29.65, which is 100% of the prior move. Now, at the same time, this also qualifies from the new low, that is 1360, this low, to this high, 22 rupees, and add it to the 23. So you have the second target. So second target is around 3160. So this is a runaway target. So I'm just showing you the way. The This is the minimum target 2965, and the pattern target, second pattern target is 3160. Here you have got two bottoms. First I calculate the first basic short target, and I have calculated the previous bottom ka target. Now coming back to in this is the graph of Bank of India hourly chart. If you can see, from a price of 75 rupees, it was coming down towards price of 64, and then yesterday it opened with a gap up. This gap is visible in the hourly chart. Once this gap was it opened with a gap up, it has reversed the prior trend. So this is a break example of a breakaway gap, and till now, till today, it has remained upside. Now I'm showing you hourly chart of Bank Nifty. If you can observe here, you can see this gap made yesterday. It made yesterday gap up. This was the bottom, 30,449 for Bank Nifty cash. It went up towards 30,789 and it opened with a gap up. So once it opened with a gap up, the low was 30,860. You take out the difference of the pre move up move of the, you measure the pre high low of the pre gap high low and add it to the post low to arrive at the target. You witness here at 10 o'clock we hit the target of 31,203 precisely, and it has reversed properly from the set target of the based on the runaway targets. I'm showing you the graph of Berger paint. If you can see, this was a gap here. Okay, now the prior move took place from here, so we'll mark the target of this runaway gap from here, add it to the high, and calculate it from the low of post gap to arrive at the minimum target. So it hit the target precisely at 444.80 on 30 September. Now this runaway gap also qualified from the low which was registered on 9th July. So I am calculating again from a low of 300, it went up towards 401. So almost 101 rupee gap. So post gap area of 401, if we add 100%, the target comes to 502. And if you see, on 18th October, it hit the target precisely. See, I'm giving you the examples of breakaway gap as well as runaway gap. I will cover the exhaustion gap at a little later. This is Havells India hourly chart. Yesterday, the prior move was an up move. It reversed the up move by going gap down. So this qualifies for the breakaway gap. Once this breakaway gap is there, the trend remains down. It's a reversal pattern. And you can watch from a gap down of 708 in 2 days, it has come towards 665 and still the trend remains down. It is not reverse at all. There are many other studies, let's say moving average, RSIs, MACD, ROCs, and advanced decline ratios, Bollinger Band, many studies to identify what would be the targets, how does a reversal take place. But today I am only discussing about a gap in isolation. How can gaps helps us in identifying either a reversal or a continuation pattern, or in case of a measured gap, you can forecast a target based on this gap. So again, few examples again. This is a hourly chart of Hero Motors. If you see here, this consolidation was broken with a gap down. This is the gap. So prior move was down. After a consolidation, again it is opened down. So it's a continuation pattern. So here it is a breakaway in a continuation form. And you see the resultant downtrend, at least from a price of 2650, it went around 2780 initially. After consolidating, again it broke down. So idea is to identify gaps. Either it might be a continuation pattern, either it might be a reversal pattern, and if it is a runaway gap, you can forecast the target precisely. Now, interesting, you see this chart of Hindalco. Here, the rate was around 182 on 27th October. It opened with a very small, tiny gap. The high was 182.40 and the low was 182.45 paisa. So the gap area is only 5 paisa, but this 5 paisa is very extremely important because it qualifies for the gap. So the prior trend in this case was down. It opened with a gap up. So confirmation the trend is reversed, and you can see the trend went up towards 206. Again, to enhance your study, there might be many applications. One can follow simple 10-day or 20-day moving average to run your profits or have your stop losses. Now, let's say on 8 November around 2 o'clock, it opened gap down. So what has happened? This gap down, the prior was up move. Again, it opened with a gap down. It remained. It did not close the gap. It came down. So it reversed the trend. Once it reverses the trend, it has come from approximately 203 to a low of 187. If it goes above, let's say 190, crossing both the averages, one could have squared off and made some money based on the simple breakaway gap or measured gap. If I will give you some few more examples. Now, this is the chart of Indigo. A few days ago, let's say 24th October, so it opened with a gap down on 25th October. So prior trend was down. So it's a continuation pattern. Again, it came down. This is a daily chart. If you see from the top, the daily chart, 1st October, you see this gap area. The prior move was up move. It opened gap down. It reversed the trend. Condition, it should not fill the gap. The gap remaining unfilled, and you have a downtrend. And till now, it is having a downtrend. Now there was a lot of news last week about Jindal Steel, and if you can observe, okay, the prior trend was up, it opened with a gap up, and it resumed its upward journey. So it qualified for a runaway gap. So once it qualified for a runaway gap, one can measure the targets as I have been mentioning n number of times, either from this low, because this was the swing low, add to the high. So we have measured the pre-gap high low. We are adding the difference to the post low to arrive at a target. If you see, precisely it hit the target of 150 rupees. So whenever there is a gap, either you can take advantage based on the runaway gap, you can measure the target and act wisely once you have the target. If it is a breakout gap, you know it is a reversal pattern. If you are in a wrong side, you can square off your position immediately and reverse your position. So the gap area helps us in n number of time. It is a very important technical indication. It gives you a big indication whether it is a reversal, continuation. The previous chart was not good, so I am repeating myself for the Reliance Industry. The prior, this is the hourly chart of Reliance Industry. The previous, it was a down move here, and if you see today it opened with a gap and it went up, so it has reversed the downtrend. It opened up with a gap up. So if you would have identified this gap today and would have taken position between, let's say, opening 1467 or let's say 1474, which is the close of this candle, any area you would have bought, you would have had an opportunity to make money intraday also till the last. It had registered a high of 1511 and there is no reversal sign till the end. So people who are traders basically focusing only on intraday would have squared off at 325. People would have been comfortable with the positional trade for let's say 3 4 days, would have waited for another up move to take place or some stop loss to get triggered. Now I'm showing you few examples of Titan industry, the previous examples. You can see there were many gaps. This is very important. Kindly understand and revert back if there is any query about this chart forecasting and all. If you can observe here at this bottom, I'm clicking here. I'm just showing you this graph of 26 December 2016. So this was the bottom 307. It went up towards 336. Okay, and then it opened with a gap up. So prior trend was up. So it's an example of a runaway gap. The post runaway gap low is 339. The gap was not filled. So we can forecast a target. So if you measure this low and a high and then the low of the post gap to arrive at the target. So here if you see 368 the target was met. Now this gap also qualified for a gap which was from this low. So we had a conservative target first and now we are having a little dynamic target. So we are taking the all-time low connecting to the high before the gap area. Post gap area we are again marking it to arrive at a target which is 379. So if you see on 25th January it hit the high of 378.45 or missing by 85 points this target. Now again, this was again a up move. If you observe, there is another gap here. So this also the prior boom was up, again a runaway gap. So again it qualified for a runaway gap. So again, measuring this uh, extension of the target, again measuring from the low of 296, marking towards the high that is 397, and post gap I am marking the low to arrive at the third target. Now it is target was 507 and hit the target of 506.15 paisa on 12th of May 2017. Again, 1 rupee short of the target, but it achieved the target precisely. Now, moving forward, this was again a gap. If you can witness, this was a consolidation. So this was a breakout gap. This was not a runaway gap. So again, the up move took place. Now, if you see, there is a big gap here between 660 towards 725. So again, now we are measuring again this runaway target, which is valid from again this low of 296 to a high of 668. Again measuring from the low of post gap area to arrive at a fourth higher targets. Sorry. If you see, we have hit the target of 1097 by simply identifying runaway gaps. You can arrive and forecast the targets, and there are in between variations also. This post gap, it can go up, it can come down, and there are systems how to identify, how to play. But this 1 hour won't be enough for me to explain each and everything. But I can just tell you, okay, you can forecast the target, and every fall you can be a buyer in this script if you got a big targets with you. I will show you few items where the targets are yet pending. If you see Colgate, you can see the prior trend was up here. It is opened with a gap. Okay. Now, in this example, I am straight away calculating the target from the bottom. So here the target comes to around 1718. Now this Colgate, as on today, it is consolidating. Once you have your basic analysis of reverse, you identify reversal based on your basic analysis. You have a target inside which is 1718. In future, this target is bound to come for Colgate. So idea is try to look for a buy signal in Colgate, and by runaway target you can forecast it. Now I'm coming back to the Ujjivan. Sorry, I'm coming to the exhaustion gap. 1 second, friends. These exhaustion gaps, they are those that happen near the end of a good up move or a downtrend. Many times it's the first signal of the end of that move. The prices gap up with huge volume, then there is a great profit taking, and the demand for the stock totally dries up. It usually represents traders' bullish euphoria or over bearish pessimism. Exhaustion gaps are quickly filled as the prices reverse their trend. Now I'll show you few examples of exhaustion gaps. See, here you can see it was a downtrend, and if you can see, there is a gap down from 25th of October to 26th of October. There was a big gap down, and after this gap down, there was no new low registered, and within 2 or 3 days, the gap was filled. So this was a classic example of a exhaustion gap where the bears did with might to go down, but to find out that there is no follow-up selling, and rather the entire sell quantity has been absorbed. You see on this volume chart, it is having a unusual volumes. So this was a example of a exhaustion gap where the trend was totally exhausted. So from this low of 172, I think when the gap went close to around 217, one could have considered buying this UG1, and it registered approximately high of 355 post this identification of this gap, which was exhaustion. On the same day, Equitas also showed you. I will show you the Equitas also. Here, the prior trend was down and it opened gap down. If you see the volume, it's a huge volume, and this gap was filled up in 3 to 4 days. And this was an exhaustion gap, and there was only one day of the bear trap. Thereafter, there was no trade below this low. So this qualifies for a exhaustion gap. Exhaustion, the name itself suggests that the trend is exhausted and it is bound to reverse. Post this reversal around, let's say, 115 to 120, it gave a high of around 143 before again resuming the downtrend. But the idea is, okay, on that day it was a big exhaustion gap. If you see, this is a chart of Indigo. Here the trend was going down. So there is a gap between 9th of July to 10th of July. It opened gap down. And if you see the volume, a huge volume was there, and there was no trade below the low of that day. And immediately it reversed and closed that gap around 1517. This was also a classical example of an exhaustion gap taking place. Thereafter, from a price of around 1500, the price went up towards 1900. So these were the three examples of exhaustion. Now let me show you the current day's few examples. I will run a query for you. You need to click a query here, go to the technical query, all scripts. Just watch slowly. I opened a query box here. How to set a query? First, you have to go to the study setup, select price, open, high, low, close. Go to the parameters. There's a daily. You can select intraday or daily. First, I'm showing example of daily. Then going to the conditions. Here, gap up. And if the trade, I'm just putting trade should be one number. It's not important. See, I've selected this price gap up. Okay, the opening should have a price gap up. The second parameter I'm suggesting, I mean clicking it, which will be gap down. So you will have both the query, how a script is identified in the morning, whether it is a gap up or a gap down. In case of difficulty in understanding how to set up a query, you can always connect to the support of Spider software, and they will be more than glad to set your query. And they can always give you a new demo in case of new participants who are not accustomed with Spider. You can have a free demo also. I'm just running a query of Nifty 500 scripts. Now this is the list of gaps which is opened up or down. Now I will take few items today which is gone down. R power is down, but not interested. See, this is SBI Life. Today it is opened with a gap down, and everybody knows that there was a block deal today. But at the same time, if you watch this chart, uh, the prior trend is up. Now it is reversed by giving a gap down. So the condition, if the gap remains unfilled, then you will find this SBI Life going further down. And if it closes by, let's say, tomorrow, then it was a normal gap. It was done for this block deal only, and it does not have a relevance if it closes the gap. But unfilled gap will give you a clear signal that it is heading lower, since the it is a breakout gap and it is reversed with the gap down. Unfilled gap will be a sure shot that the script is going down. I'm not taking the items which are, let's say, called as Ibul Housing or Diwan Housing or Reliance Capital. Okay, now this is Bharti Airtel. Today it opened with a gap up. So if this gap remains unfilled, then you know, okay, the prior trend was up. You can easily forecast the upside for the target. Condition is the gap should not remain fulfilled. If the gap remains filled, let's say today, tomorrow, or day after tomorrow, then perhaps this might be acting as a exhaustion gap. So you need to now take two view. If you want to buy this Bharti Airtel, I can show you the targets based on the runaway gap, that is connecting this low of 350, connecting this high of 420, so roughly 70 rupees up move from the 421. So it comes to around 491.70 paisa. The condition is this gap of 420.55 to 421.45. This gap should not be covered. If this gap remains unfilled, you have an upside target of 491 for Bharti Airtel. It may take more number of days to move up, but unfilled gaps will surely attain the targets on upside. Not taking this coffee day because it's a circuit to circuit item. I have shared with you this corporation bank previously. I've shared with you this idea silver. Let me see this Mahindra CI. Okay, there is a small gap today in Mahindra CI, but today is a red candle and there is no volume. So I would have preferred it being a green candle today. And if there would have been a big volume today, then it would have been considered as a breakout. But perhaps this might be a normal gap, may not have such a big relevance. See, this is a Delta Corp graph. Okay, now this is interesting. This Delta Corp, the prior was a downturn. It has opened with a gap up. It's having a lot of selling. It's a pin bar basically, and it's having a lot of selling from the high. And today had a huge volume. But the formula remains the same. If the gap does not fill, then again it will turn bullish and it should move up only. Now, one more thing regarding gap. Okay, take example of this gap. Okay, now this was a breakout gap previously for this Delta Corp, and when the price went came down, it acted as a support. So the gaps are important support. If for the future it is a very good support, but there is no system. Please take care that there is no way that one can say the gap is going to get filled up. There is no study as such that compulsory that gap has to get filled up. So don't focus on the gaps to get filled up, because if you wait for the gap to be filled up, then either you lose an opportunity to buy, and if the gap does not cover, then you end up entering at a higher level. Or at the same time, if the gaps are covered and it closes below the gap area, so for example, if this delta is taken a support, but let's assume that it has broken this support and come down, then you can have a follow-up sell-off, because the previous gap was closed and it can go down. But there is no study as such that the gaps are, yeah, has to be filled. There is no compulsion as such. and there is a lot of gap in around 6300 for Nifty, and we are at 12,000. We are almost double. And if people wait for the gap to be closed, then he would, if he would have been a seller, he would have lost miserably. So I think I have concluded this gap. I hope, okay, I've been able to explain you with a good number of examples. Uh, Thank you. If there is any query, I can be reached at my WhatsApp mobile number. You can note down my mobile WhatsApp number is 98 332 77 889. And second thing, I can be reached at my email address, personal email address, that is Hitesh dot p dot Sheth, Hitesh dot p for Pune dot Sheth, Sheth at the rate gmail.com. You can contact the Spider support system also for any demo if you need, especially for the participants who are new and who might not be using the Spider. And for the people who are Spider users, if you want to set any query regarding gap, any clarification, either you can connect with the support of Spider, or you can contact me on my mobile WhatsApp number. We'll be more than glad to help you. Handing over to Manish.
Uh, Hello, friends. First of all, thank you, Hitesh bhai, for explaining these gaps in such a beautiful manner. Friends, I would like to suggest you and appeal you all to explore and identify how these gaps are giving you productivity, how these gaps are giving you output in the intraday market and live market and daily positional calls. You have to set a query in software, and for setting this query and identifying the results on that query, we are providing free demonstration. So I would like to appeal you all to take free demonstration, take guidance from our executives, set this query and take out the output. On the basis of free trial and free demonstration, you can identify the success ratio of this query and strategy. So for demonstration, you can contact our spiders numbers. The contact number is also mentioned in our in your registration link. So you can contact and you can take free demonstration. Thank you. One more announcement I would like to tell about Hitesh Bhai. Hitesh Shed also conducts basic and advanced workshop on Elliott wave, Neo wave, these gap theories, and he has expertise in all other technicals too. So people who are interested in those subjects, they can directly contact to Hitesh Bhai for future reference. He already told you the number, or you can contact Spider Academy platform for your future communication. Thank you, guys.